Welcome back, everyone. It's NYU Grads Daily Podcast on Thursday, September 21st. This is going to be a tough one to cover. I know a lot of people lost money today, so I want to be sensitive to that. But I have been warning on the degradation of breadth consistently for the past few weeks. Almost every day, or at least 3 sessions per week, it seems. And after the Fed FOMC Fed rate on Wednesday, today on Thursday, we had a continuation day to the downside. There was an attempt in the afternoon for a little bit to recover prices, but breadth was not allowing it, and we closed near the lows of the day. And I'll kind of cover today how I suspected this. And if you've been listening to the podcast, you know I cover breadth every day. I've gotten some emails asking to explain this a little bit more and why I follow it so religiously. So if you recall, on each episode, I open up with breadth. And not like breath, but with a D before the TH, breath. And the reason I do this is that when you have a market that's so congested into 7 to 12 names, Magnificent Seven and potentially a few others, it actually becomes very easy to follow Wall Street. And it's all about intentions, right? Because you and I, for the most part, depending on who's listening, I highly doubt Jamie Dimon is listening to this, but the majority of us don't have an edge versus Wall Street. Okay? They, for the most part, through regulation, cannot be banks and investment banks and brokerages, but they still have so much leverage, technology, data, and computing power to trade against us. So the reason why I follow breadth every day is because it's very hard for Wall Street to hide their intent over time, because ultimately all their money is locked up in a few names: Apple, Microsoft, Meta, Amazon, the Magnificent Seven, Nvidia, Tesla. So for them, and then think about this, look at the S&P, look at the NASDAQ, look at your 401k, look at all of the mutual funds. They all own the same thing. Then you look at corporate bonds. How much percentage do you think those Magnificent Seven owns of the corporate bond market? Right? It's very easy for Apple to sell bonds, corporate bonds, right? No one thinks they're going to go out of business, so they can sell their corporate bonds at low yields. So I focus on breadth because you can easily watch 7 stocks, but then you can also see what's under the hood and what's happening. So as you recall, I cover new highs, new lows, what percentage advanced, what percentage declined, and how many shares are trading under the 50-day moving average every day. If you make this a habit, in addition to studying how everything is interlinked, currency, yields, bonds, stocks, housing, and you start to see the interplay of where big money is flowing in and out of, it just becomes much harder for Wall Street to hide their intentions. Now, if you go back into like the late 80s, because I was probably too young to trade in the 80s, right? I definitely was. It was a very much a stock picker type environment where, you know, you had an advisor. There were a lot of stock picking type services. But right now, everything is in ETFs, and everything is in like 7 to 12 stocks. So let's jump in. We had 41 new highs today, and we had 723 new lows. So before I go any further, that should tell you there's a problem. That's not you and me selling, okay? It was heavy in institutional selling today. You had 18% of shares advancing, 78% declining, and now you have over 70% that are trading below the 50-day moving average. Let me get the exact percentage because I don't want to misquote this, but I'm pretty sure it's over 70 now because we've been teetering between 60 and 70% trading under the 50-day moving average. But we are now at 79%. So in a day, we went from 71% under the 50-day to 79% under the 50-day moving average. So that's not good. And this is why I follow this every day. So there, to expand on this, some days, like the Wednesday session, you will see a sell-off on the broad market, and all of a sudden, Apple or Amazon or Microsoft or Meta or Nvidia or Tesla, they just start to get defended and they stop going down, and then you'll see them start to go up, and then you'll see the volume of breath start to go up in unison, and then all of the other crap, the risky assets, the risky stocks that have been plummeted, like Shopify, right? They start to go up in unison, in sympathy, right? And the Magnificent Seven can sometimes save the day, right? Because if it's panic mode, you're the president of the United States, you call the Fed, you call Jamie Dimon, you say, hey, Wall Street, this can't happen on my watch. Press some buttons. What do you think they buy? They're not going out and buying, AMC. They're not going to buy DraftKings, okay? They're going to buy Apple, Meta, Microsoft, and those type of names. So if you watch those Magnificent Seven, you watch breadth, and you watch the interplay of yields, bonds, currencies, it just becomes much harder, again, for your opponents, Wall Street, to hide their intentions on a daily basis over time. Sure, you can take a L today or tomorrow, but if you do this religiously every day, you start to get almost a sixth sense, and you start to be able to read the tape, and you almost can feel the pulse of the market. So I didn't know what I was going to talk about today because everyone's panicking, everyone's texting and calling me, and typically when you have a day like today and on Wednesday, you usually in the past decade have a defensive day, right? Someone will say no more, and you'll see buyers come in. So we might have that on the Friday session, right? Because we're heading into end of quarter. We're heading into end of month. And the powers that be don't want this to crash. So it would make total sense for us to potentially make an attempt to bounce at like Apple, if you look, is at the 150 day. For some technical traders that are shorter term, the 150-day moving average is an important lever. I don't watch it that much because I don't trade every day. But the 200-day and the 150-day or the 120-day, whatever you want to call it, I'm watching the 200-day because if the 200-day breaks, it's over. Okay? So that's kind of the overview of today's session. We sold off all day. There was nowhere to hide, unless you were short bonds or short at all, or long volatility. You're in the red. I'll post the heat map, but everything was pretty much red. I'm going to tell you right now that the sectors and stocks that pay dividends, that are heavily liquid, where you can sell $1 billion worth of Apple and move that money quickly into something that you can also sell tomorrow, that's where all the money went. If you look at UNH, they're up almost 2% today. If you look at CVS, they're up today. If you look at J&J, they're only down 0.7%. Pfizer's down 2%, so that's pretty big. But again, they got everything today. It'll be interesting to see, the markets are now not only intertwined domestically, but they're also intertwined internationally. So it'll be interesting to see overnight if there's an attempt to rally risk assets via either Asia. China could come out and say, oh, we're going to do this, or Japan might do that. Or at the open of the European Open, where the ECB may try to do something to stop the bleeding. I don't know. But I am also cognizant that Friday is typically crush the VIX day. And if the VIX gets sold off on Friday session, you should see some relief in risk assets and some type of bounce. Even today, in on X or in social media, everyone is just clamoring, oh, this is it, this is the bottom, we're gonna rally, this is gonna pop, this is gonna bounce, we're done, you should not short, your shorts are gonna get buried. Like, that's the sentiment. Everyone is still in buy the dip mode. So that could be a self-fulfilling prophecy, where if everyone buys the dip tomorrow, we might have a bounce. But again, I go back to the intentions of Wall Street. If you and I buy the dip, that's fine. In the morning, we may rally. But if someone has instructions to offload billions of dollars of Apple, Microsoft, Nvidia, and Tesla, they're just going to wait till you buy. Till you and I and, mom and pop and our uncles and our friends and our coworkers buy that dip, and they're just going to sell into it. So watch breadth, watch yields, watch the Magnificent Seven, watch currencies, and let's see how we close out the week. I said earlier in the week, not expecting this, I thought we were going to have a downdraft, but not this big. But how we end this week, how we close on Friday the 22nd, and then look at the whole picture of this week, I think it's going to set the tone for the rest of the year. So if somehow, some magic, tomorrow on Friday, we have like a 300 to 400 Dow point recovery, and all the Magnificent Seven fly back up, and the volatility index gets crushed down to 12 handles, hey, we may close the year on the bullish side. But if we continue the sell-off into the close, the open, I'm suspecting a bounce. I really am suspecting a bounce. We're oversold. But if we bounce and then sell off, and if Apple loses the 150-day moving average, which I don't even think is that big of a deal, but short-term traders see that 150-day average as a big deal. For me, the 200-day moving average is a big deal. But if Apple loses the 150-day, it's going to beget more sellers. It's a self-fulfilling prophecy. So watch out for these levels. I'll post everything in the show notes. Thank you again for checking in and being consistent listeners of the podcast. please share this with a family member or a friend that you think might benefit. I do have a referral program. Everything is free right now, but it's an incentive program where you can earn free premium months once I go premium. So I appreciate everything you can do to help the channel grow. I will see you on the next podcast. Thank you so much.